of the earnings that are coming up. I hope you guys are having a good morning. I am very excited. I have not had any coffee. I've got a nice Celsius here that I have not cracked. It tells me that it has essential energy. It tells me that it accelerates my metabolism. And it tells me that it burns my body fat. I don't believe any of this. We'll try that later. All right, let's dig into why we are doing what we do every morning. All right, as you know, if you are not paying attention to what we're doing before 9:30, you're in trouble. Today is the perfect example of this. A perfect example of why you need to be with us in the morning at 8:45 Eastern, 5:45 where I am, because over the next 35 minutes, we're going to talk about why today is such an important day and how earnings are so related to all of this at the end of the day, right? The idea that there will be massive reversions, there will be massive opportunities, and it is Third Friday, which means an opportunity to trade short dated, zero date options across everything you want to trade. Where's the money positioning? Don't worry about that. Only focus on what is in front of you. It is Third Friday. You get one of these a month. Make the trades. Be excited about today. On the macro side, just to let you know, we are at all-time highs. And there are cracks in the foundation, no doubt about that. But here we are, looking at the current state of affairs, looking at the futures. We just continue to ride higher. And look, a couple of days ago, I told you energy went negative. It held on by a thread, and oil reverted off of a very short-term bounce. And you can see that. Pull up the OIOU, which I always tell everybody to watch. Right there. See that tick? 9:30 in the morning on July 17th. This move right here as well, the 16th on Wednesday. We bounce back. And this is why you've got to be a scalper. You've got to be willing to take advantage of moves when they come. And you have to look for very specific reversions. I had a position in Apache. I talked about that. I know that a couple people took that position too. This is bouncing back. Oil is bouncing back. The energy sector is bouncing back. And so is the XOK. So is technology. The trends of today are driven, obviously, by what is happening with momentum. We see a lot of capital flowing back into the system. And I just want to remind you that at the end of the day, in this market, the Trump administration and Scott Bessent are obligated and focused on ensuring that there is enough capital flowing back into the system. It makes shorting very difficult. Very difficult. I would not be in the business of trying to short this market unless you see what I've already told you before. The FNGD has to break above its 20-day moving average. Now, the FNGD, if you don't know about it, is an inverse index leveraged 3x ETN around debt in the FANG stocks, Facebook, Netflix, Google, everyone else tied to that magnificent seven. When this breaks above its 20 and its 50-day moving average, we see crisis. This is the most recent downturn. This is the Nikkei crash of last year. Do not try to be the first person over the wall. I shorted energy, and now I am in a position with a position that I have. I went from a 30% gain to a 0% return. I stopped out on my Apache trade. That's okay. I still followed my rules, but It just shows you that if you inject a lot of capital into the system, your shorts become a form of liquidity for other traders. Because I'm shorting something, I have to buy that back. And whether that's options as a short or whether that is just the stock itself, I have to exit that position. I didn't make any money on that trade, but I had very proper risk management around it. I exited it at a 0% return. But I will just let you know 0% is a lot better than minus 100%. Netflix is the stock to be watching today and trading if opportunity persists. Netflix is down 2.6% today. And I would not be shocked if we saw, after this move on the 20-day moving average, and if we saw off the back of this relatively short-term momentum rally that we've seen, 1242, that there will be a reversion today. It is Third Friday. This is the most liquid day for options in July. What are we looking for? Well, I'm going to walk you through that right now. And you know that we like to focus on reversions. What does that mean? It means that we want to find at some point an overreaction to the earnings news. And what I have in front of you is the volume weighted average price. Now, this is specifically what I am teaching in the Tesla Masterclass. It is built around the fact that this market, 50% minimum of order flow is done by algorithms. Volume weighted average price is the 1 minute move on the price of every stock, every index, however you want to define it. But if you look at this, what you're seeing this morning is this sell-off from 1254. It has taken us all the way down to 1236. Options are expiring today. What am I looking for? Well, every single band that you see in a different color, green, kind of a unsatisfactory brown, and then this third group, that's the first standard deviation of price. This is the second standard deviation of price. This is the third standard deviation of price. And what we're looking for at all times for a very liquid stock like Netflix is an overreaction. Does it mean it's going to happen today? I don't know. But I will tell you, because this is a company reporting earnings, this is a very liquid company, a lot of people are focused on it, that if there is an overreaction today at any point, I want to see the stock move into its fourth deviation of price, because that is where, statistically speaking, algorithms are likely to buy. And if that is the case, if it sells off, I will be trading down here and going long short duration options, simply because I'm looking for a reversion back to that blue line. And it might not seem like much right now, but given the fact that we are post earnings, you're probably going to see a very wide spread today. And the possibility that we might touch 1200, maybe even less than that. It doesn't even matter what the numbers are. That's another important point. Didn't matter how many subscribers Netflix had. What matters is how were funds positioned ahead of that earnings day. And if there is an overreaction, it creates an opportunity for us to look for a snap back, maybe $43, $45. And it might not seem like much, but on a day like today, where there's so many options, so much money sloshing around, upside. That's what we're constantly looking for. The last thing I want to point out, the United States is experiencing one of the biggest and worst sell-offs in its currency we've ever seen. And that is evident in what we have talked about in the UUP, the Dollar Bullish Index. Well, if we take a step back in the last couple of days, it looks like the dollar is rallying. But take a little bit of a step back and look at this sell-off that has transpired. The US dollar is under pressure because of the administration goals. I'm not going to make this political. I'm not going to blame anybody. I'm simply going to state that because we have this massive trade deficit, because we are the world reserve currency, we have a very dominant currency. Last year, the US dollar was 20% overvalued compared to all currencies in the G10. And the G10 is the biggest top 10 economies in the world. We were overvalued. Well, right now, we're seeing a systemic decline in our currency. And we'll see these snapback rallies as they come, but the trend for the dollar is to the downside. We will get these short covering periods. You will see these little gap ups. But the overall trend of the dollar is to the downside. So this is the UDN. This is the inverse bearish ETF around the dollar. I'm not trading dollar futures. I'm trading the ETF that shorts the dollar. And right now, as we are approaching the 50-day moving average, I see opportunity for us to short the dollar, because you don't want to be shorting the dollar when you're extended. You want to be shorting the dollar when you're at these moving averages. Right now, if I looked at this, I would say we want to go out maybe a month, month and a half. And just to let you know, one of the benefits of this morning's show and what we're going to be doing in the future is we're going to have 2 or 3 trades a month that are dedicated to macro events like this. What I see in this current situation with the UDN is an opportunity not to spend $1,865 trying to short the dollar. Instead, let me show you how great the UDN actually is. The UDN, from a shorting the dollar perspective, would allow us to go out to August of this year. And what you're going to see, you're not going to see a ton of volume, but you're going to see something very unique. 1860, right? 1865, forgive me. Old West. Okay. Instead of shorting this, what we can do is look to buy the $18 call on the UDN for 65 cents. I would pay up to 70 on this, by the way, because we're looking for this trend to continue. There is no volatility because it is the dollar. So you go out there, or you go out to September, and you will find that the 18 has the spread. 0.75, 75 cents, 10 cents in exposure. The upside here is to the 1950 level. Again, using that 20-day, 50-day metric that we talk about, the 50-day moving average has become support. So the reason I bring this up is because we are seeing within all companies, they are worried right now, particularly in the S&P 500 level, about exposure to the dollar. What does that mean? Well, international companies traditionally have benefited from a stronger dollar, and then they have to take the local currencies and put them back into US dollars. That has hurt their balance sheets. But in this situation, we're actually seeing a situation where companies with a lot of exposure in Europe are actually hedging against the dollar. And that hedging is a weakness for the US dollar. They're effectively buying the euro and positioning for further weakness in the dollar. And right now, this trade setup that we're seeing is built around the back of this key resistance level, the 50-day moving average. And the beauty of something like this is there is very little volatility in the dollar, which means I can go out 2 months, set a limit order, and only pay 10% or 10 cents for the right to short this. Or I go into August and I specifically set a limit order trying to buy this for 65 cents instead of paying 1,865. I controlled the same number of shares. That's the beauty of options. And that's the beauty of using a dollar index like this. Instead of putting up 1,865, I only have to pay $65 to $75. And this is a way to short the dollar. And on top of that, forgive me, my voice is going froggy. Okay. There is an opportunity to at least ride this above that 20-day moving average. So in that 70 to 75 cent range, continued weakness in the dollar, continued erosion and debasement of the dollar, you're being set up, you're given an opportunity right now around that 50-day to that 20-day moving average. That's the beauty of trading. That's the beauty of options. So if I'm being asked to make a trade recommendation, short the dollar. It's only going to get worse. All right. Interesting situation we're in the broad market. It's 6:04 in the morning. Whew. Wow. But I'm up. Last time, I promise, last time I do this. Secret agent Charlie, talking 1200. People saying good morning. I hope you guys are doing well. It is an inverse fund. It's a bear fund. It's a bearish dollar fund. But that's the beauty of using the options. There's literally no vol in this. I think the volatility on this is 1 or 2. I am not built for the West Coast, Don. You know that. You know that. All right. Here are the stocks that we're talking about today. XYZ, what do you do? Block, Inc. Strong momentum. And you're going to see right here that push above that 20 and that 50 and that 200. Technology software. Nice solid move. Strong momentum coming off the back of that May sell-off. 72.76. ALB is on the list. Materials continue to do great on the back of that weaker dollar. Albemarle. Now, if you have not been trading this line is now resistance, the 200-day EMA. If we break above that, that becomes your line in the sand. That becomes your opportunity for another sided reversion. This sold off very badly. I don't want you to think about the fundamentals of any of this, any of these chemicals, any of these materials, anything around lithium. Just trade the flow. You might have missed this. You might have missed this. Well, here's your third line, that 200-day EMA. If we get back above that level, that is where institutions are going to flow back in. IonQ, we've seen this a couple of times, bouncing around, but same thing. Strong momentum above that 20-day moving average. And as I've said over and over again, your stop is that 20-day moving average. It's pure momentum. ALB, Bitcoin, or forgive me, Bitcoin, Coinbase. Well, how do you trade the fundamental flows that are associated with crypto? I know Don doesn't like this one in any way, but as we have seen, I just want to line this up. Go to your daily chart and pay very close attention to when crypto, Bitcoin, Coinbase, everything else is at the 80 level on RSI. High beta stocks, when it comes to the RSI, do not reflect on the 70 level. Overbought, oversold on the RSI. Overbought is 70, oversold is 30. But when it comes to really high beta stocks, you want to pay attention to 80 and 20. It's the way that Tesla works. It's the way that Coinbase works. It's the way that all of these very high accelerated stocks accelerate. And in this case, you see we were at 82. The MFI, which is the money flow index, which is a combination of volume and price, did go overbought at 80. And what has happened every time that we have seen RSI of 80 and MFI of 80? These stocks have sold off. So right now, we are not yet at an 80 on the MFI. We saw that happen recently with Coinbase going back to June 27th. And we had a move down from around 376 to 340. And then the market took this stock higher. There was a reset. It was very short. But I want you to pay very close attention to this chart, the MFI on the daily of Coinbase. Because if it gets up to 80 and we are overbought on the RSI, it becomes a contrarian shorting opportunity. Be patient with a stock like this. These opportunities come maybe once or twice a month. And the reality is that, yes, this is overextended. Instead of chasing that momentum, you want to be the person who wants to take a step back and waits for the very optimal opportunity, particularly when the VIX is under 20, to short something like this. Today's not the day to do it, but it may align in the next 5 to 10 days. Apparently, Eric is calling for my head. All right, short side, AIG. Wow, this is a problem. This is important. This is very important. AIG, when it sells off, and I mean it sells off, there is a problem in the system. This market rally, which is on the back of a significant number of just high octane stocks, when AIG sells off, there is stress in the system. And it happened back here in April. And it happened back here in August. And it happened back here during the Silicon Valley banking crisis. AIG is selling off right now. This is the canary in the coal mine. Something is wrong. Something big is about to happen. And we're seeing it because the only reason that AIG sells off is that there is default risk. This touched its 200-day EMA. We're at 80.50. We're not talking about that type of move, which happened in April, but there is a significant issue in the broader market. So even though we're at all-time highs, and even though we have this massive stretch, right, 73% of stocks above the SMA 50, I want to point out that when AIG sells off, there's a problem somewhere. My thesis is it's in Japan, but it might be here. And every time we break under these moving averages, definitely every time we get under that 200, there is an issue at hand, which, again, FNGD, we're not there yet. We're not breaking above that 20. We're not breaking above that 50. But when we do, it's going to get nasty. It gets ugly really fast. AIG is a proxy of default risk in the financial system. And when it breaks down fast. Keep a very close eye on that 200-day EMA. Nothing good has ever happened when AIG starts to break down. Whether it was the Silicon Valley banking crisis, whether it was the gilt crisis, whether it was COVID. Bad things happen when AIG is under pressure. And I'm not trying to scare you. I'm just pointing out the reality of the financial system. This has been selling off. So keep this in mind. Don't be the first person over the wall, but obviously look at the FNGD. On momentum, we are even. We had an issue with some data with the FinViz. So we did the math by hand this morning. We were at -1. The FNGD is still under its 220 and its 50-day moving averages. So we're not trying to short. But I do have to make one public declaration this morning. I have to apologize to somebody. And it's really hard. It's really hard to admit when you're really wrong. Man, this is tough. This is really hard. I'm sorry. I might cry. For the last couple of weeks, I have been actively making fun of the fact that every day that my analyst and I get up, he has been repeatedly telling me about this company, WIMI. It has been on our list for the better part of a month. And it ripped 12% yesterday. And it has been a very solid momentum trade. And we are now above our 50-day moving average on WIMI. I don't know what you do. I don't know what this stock does. But I'm just going to say this. And it's going to take a lot of my effort in the morning at 6:15 on the West Coast to say this. I'm stupid. You're smart. I was wrong. You were right. You're the best. I'm the worst. You're good looking. I'm not very attractive. WIMI has been on our list, FNG score stocks, and it just took off. It just took off. And once again, if these stocks that we talk about on a regular basis, and we're going to dig into this stuff once I get back home, You buy them and you set the stop right at that 20-day moving average. This hit the line at 290. It's at 380. That is an absolute monster of a move. And that's what we're looking for. Undiscovered names you've never heard of. And you go, what do they do? And the answer is, who cares? Who cares? The market is not built around fundamentals anymore. It's built around momentum. It's built around capital. And WIMI, as much as I made fun of it, it has been in our morning show for 3 weeks. And legitimately, Scott, who I do this with every day, we're up in the morning at 7 a.m., 4 on the West Coast. He's like, well, WIMI is back on the list. Like, I don't want to talk about that. Well, it's right in front of you. You see what has happened since this hit our watch list. I don't know why stocks go up or go down. I don't know what somebody sees in this bizarre Chinese company. But I do know that it was above its momentum lines. And I do know that we saw strength in that 20-day moving average, where the 20-day moving average is ascending and the stock just keeps going up. Doesn't matter what it does. The only thing that matters is you make a smart, calculated bet around the names that hit this list. And you don't think about it. You just simply set the stop back at the entry. And it's funny that WIMI is on the list because I am an avid fan of the momentum of Weibo. I've recommended Weibo. Most recent recommendation came after the company bounced around its 20-day moving average going back to May. And I was in the stock and it stopped out and then it rallied again above its 20-day moving average. I want to just tell you in the last 2 minutes that at the end of the day, you may not trust China. You may look at it and you say, this is a communist country and I want nothing to do with owning the companies. Fine. But here's the thing. You are not in the business as a trader of caring about who is in charge of a country. You are in the business of making money wherever that money is. Wherever it is. I want you to really sniff this out. I want you to understand, we don't get up in the morning and give a damn where the dollar is. We don't care who is doing what. If you are consumed with the politics of this, you're not going to be a successful trader. I hate to tell you that. If you don't like the current political situation, if you don't like the way that the world is, the single best thing that you can do, and I'm not saying get even, I'm saying put yourself first and understand where money is moving and to take advantage of that. If you want to fight against inflation, if you want to fight against hedging, you want to preserve your if you want to preserve your wealth, you have to learn this stuff. Trading is not optional anymore. Trading is the single most important thing that you are going to be able to, but also have to do in the next 5 years. And I don't care if it's Weibo or Apple or the dollar or palladium, whatever it is. It's simply about following the flows that a lot of human beings aren't even involved in. It's a lot of algorithmic trading. It might even be the case China's going to pump another $1 trillion into its economy. Well, what do? I trade Weibo. I buy whatever the hell this company does. I don't care. When it breaks above its 20-day moving average, when it is a strong momentum stock, these are the types of things that take us from 850 to 1022 in about 3 to 4 weeks, if not 2 months. Okay, that's what I want for you. I want you to be a successful trader. And I don't want you to hope. I want you to focus around these key moving averages that signal momentum. And that's it. That's my message of the day. I don't care what Weibo does. I don't care what Baba does. I don't care what JPMorgan does. Baba is back above its 20-day moving average. If I want to trade this and I buy 100 shares of this and put $12,000 down, my stop is right back here at that 20-day moving average, and I'm looking to scalp and looking for this to move back to 146. That's it. I can't make it easier. It is 6:21 in the morning. I'm going back to bed. I'm very tired. But I hope that you have a great trading day. I will be in the room with our friends for trading Tesla in about 15 to 20 minutes, and we're going to go from there. Let me check the chat. Cool. JD walking up. GM, thank you. Bought it on the 15th. Good. That's the point. Where's the liquidity? Options are terrible. Spread in the stock is wide. I don't know what Trade Monkey wants. But if you have questions, support at TheoTrade.com. Put my name in the subject line, and we will go from there. Hope you guys have a great trading day. Thank you so much for getting up with me as usual. I'll talk to you guys on the other side. Don's coming up in 8 minutes. Take care.